Hey everyone, and welcome to our event today on DeFi. We have done 2 events before this, and today I'm excited to have some top builders in the DeFi space. This event is done in collaboration with Ethereum Foundation and DevFolio. My name is Shreyas. I'll be moderating this event. I'm the founder of Llama, which is a dashboard to manage crypto treasuries. And maybe we'll start off with intros of the panelists. So probably Arpit, could you go first?
Yeah, sure. Hey, Shreyas, and thanks to DevFolio for organizing this event and having me. So yeah, for me, I got into blockchain space about 2.5 years back, and then used to be a backend engineer before that. Yeah, when I started, I basically was just going from hackathon to hackathon, because this is the great thing about ETH community. There are just too many hackathons, right? And yeah, went to SF, Singapore, Berlin, Bangalore. So all that was really nice. And then in 2019, I started working with Matic Network, and I was there for about 15 months. And then somewhere around this time, the idea of DeFi dollar came along. And then, yeah, I and my co-founder Siddharth, we set out to build this.
Awesome. Francesco?
Yeah, so I've been in the space since 2017. So I joined when the Bitcoin price was going up by 1,000 every day. Very exciting times. And then I don't have a technical background, so I was doing something completely different before. But then I just fell down the rabbit hole. And I think my first year, I basically stopped doing anything else and just learned about crypto, started doing some development, eventually started doing some front-end development, and then started going down the hackathon track. So did, I think, 4 or 5 hackathons in 2018, 2019, and 20. And then we built a project called RDAI a couple of, now 2 years ago. And that's still live on mainnet, still going strong. And it was one of the precursors of things like DeFi dollar, because it was one of these composable dollar yield coins. And then after that, we started working on Superfluid, which is what I'm working on now. So the idea of money streaming, basically. But yeah, it's been a wild ride, and I'm happy I lived through the bear market to come back to a new bull market and to witness it again. Very exciting.
Great. Yeah, it's good to hear someone who's just went down the rabbit hole from scratch and started developing. I think some other attendees in this call might be in that space, so it's cool to see someone who's done it. And also, every new cycle brings a bunch of new devs and other folks in the space. So the recent price run up is, yeah, a good sign of that. Haytham, do you want to introduce yourself?
Yeah, sure. I'm Haytham. I work as smart contract engineer with Open, building options on DeFi. Been involved in the space for the last 3 or 4 years, working mostly as smart contract engineer. Yeah, I've been to a few hackathons in Berlin and Denver, and yeah, I like Ethereum hackathon, and great to be here.
Awesome. Sergey?
Sure. Hi, everyone. My name is Sergey. I'm very, very happy to be here. I started also my journey on the hackathons. My point was actually 2011 already with cryptocurrency, but I really joined end of 2016 in the Ethereum crypto space. And together with my co-founder, I participated in a lot of hackathons. We participated on more than 15 hackathons, won a lot of them as well. And on one of these hackathons, we have built OneInch. OneInch is a leading DEX aggregator, and in the meantime, also a liquidity protocol, which solves huge problems like front running and so on and so on. And yeah, I'm proud to be here, and yeah.
Great. Chandresh?
Hey, hi, thanks, Shreyas. So hi, everyone. Really glad to be here. So I started my crypto journey in around 2016. And after doing research, 1 year that where the space is going, and being one of the investor for major projects in 2017, I joined Matic and was leading their marketing and strategy for 1 year. And during that time also, that time only I was introduced to ETH India and have participated in multiple hackathons, judging and helping all the students. Have seen a lot of projects come out of ETH India and other hackathons also, and doing really great in the space currently. Yeah, so after recently last year August, me along with my two other co-founders who were previously building Meta Transact, we started working on Uniland, and yeah, I'm really glad to be here, and super excited to have opportunity to support all the young builders who are participating now.
Great, thanks, Chandresh. So maybe to start off with, could one of you explain what DeFi is and exactly what the value proposition is, what the difference is between centralized and traditional finance? Whoever wants to take that.
Sure, I can start. So basically, DeFi is just like, it's basically fintech on steroids, right? Because so software is eating the world, right? But I think software hasn't yet eaten money, because when it comes to transacting, right, you always have to go outside of the realms of the internet. There's no money that is native to the internet, right? You always have to use a phone or use your card to make a transaction. So DeFi tries to solve all of that. And yeah, like I think my favorite thing about DeFi is the composable part, the programmable money part, right? So because if there are so many financial services in like traditional finance, right? But then how easy is it to move money programmatically between all of those financial services? If I get $10, can I put that in an interest-bearing account? Can I put that in some other financial service automatically, like in one go? I cannot, right? So DeFi is like takes a stab at all of that, and basically it gives you an opportunity to program money. Yeah, and I think the best thing is like what each financial service or protocol offers you simply because you can read the code, right? So yeah, it's transparent, and because of that, it's composable, and because of that, it's super easy to like build a lot of stuff on it.
Can you explain what composability is with an example in DeFi?
Yeah, so like we are, so let's say there's a protocol, right? It's called Compound, and like to be like in just layman terms, it's basically you deposit your money there and it grows because there are people who are borrowing money. So it's kind of like a bank, right? If you don't know what DeFi is. Now I get some money, right? And then the composable part comes when I don't even have to ask like Compound's founder or their teammates to like actually put money in their protocol. I just have to, I can see their code. I just know the API. I then call their contract and then my money goes there, right? So composable, the mental model is basically having these Lego blocks, and these are permissionless. Like you don't really need anyone's permission to use them. And then using those Legos, you can build anything. Yeah.
Awesome, that was helpful. Francesco, could you talk about some of the top projects in the DeFi space, and maybe to help give people a sense of like some of the broad categories of DeFi applications, especially ones that have been successful so far?
Sure. So DeFi, just to extend a bit, Arpit was saying, a lot of what we see is basically reproducing existing financial primitives on new rails, right? On new, more efficient rails where we have native money, we have native digital money, we have these open ledgers with these open APIs. So I think the first applications we saw were very kind of naively trying to reproduce that. So we saw a lot of exchanges which were working with order books, right? Then the next generation of exchanges introduced a new model, which was the AMM. And there, I can mention the biggest projects in the space, which would be Uniswap, Curve, now Mooniswap by 1inch, but also things like Balancer. And on that idea, so many other projects have also built these automated ways of calculating how much the counterparties are owed, right? So you have even projects that are building now futures contracts, which somehow automatically manage to calculate how much each party is owed. So I'd say broad categories, we have exchanges, Then we have lending. So lending and borrowing, basically it means some people put money in and they receive an interest. Other people put collateral in and take out loans and pay interest. And I'd say the third one is maybe options, because they're really growing a lot nowadays. We have Haytham here from Open. That's a huge space that's growing a lot. And now futures are coming too. I'd say the major projects to look at, if you're a new developer, you want to go and look at some code that's easy to understand, go and check out Uniswap. That's kind of where I think everybody should start, because it's really clean code, very simple, kind of extremely gas efficient. And then start leveling up, maybe look at Compound or look at Aave for lending. So you can start looking at those yield-bearing tokens. And then maybe if you want to look at something more advanced, go and check out maybe YFI, which are, YFI, which are these vaults with strategies. So there you start seeing more complex structures and other kind of ways of using the composability that Arpit was talking about. So that would be kind of the journey I would suggest for people.
I would like to add, so guys, if you interact with DeFi components, money Legos, take care, please, and first get the understanding what is behind these products. I can give you a good example here. Today, Wi-Fi was drained. And the people lost $11 million. And it's very important that every project has enough audits, not only one or two security audits from different companies. We from OneInch, we try to order like minimum 5, maybe 10. So it depends. As more as possible to just ensure that everyone's safe, because we are working with money at the end. Cryptocurrency is money, and take care.
Yeah, great point. We have a question from Rithwik on yield farming, which I think is relevant to the DeFi craze in 2020. So maybe Haytham, could you just explain what yield farming is, and why projects have used that as a strategy, and how users possibly benefit from this?
Yeah, I guess basically farming is like a fair way to reward user and to distribute the governance token of the protocol. So I think it's a way where like user can deposit their capital to earn specific rewards, which can be like more yield or like more governance token from that protocol. So I think basically like it's just like a fair and transparent way to distribute rewards based on the amount of capital you deposit. I think we saw a lot of users for that during like the last 6 to 8 months, especially like with the first one. I would say like the comp token, which like made a huge change in DeFi. Yeah.
Cool.
So basically, I would just like to add one more thing. So what was happening before decentralized finance? Many projects we have seen. So most of the tokens were held by the major investors. So what has happened, currently in decentralized finance, what everyone is realizing, that the actual protocol users should have skin in the game. So just like, Hedam also mentioned that when now, any protocol which is launching and they are going for a fair launch, so they want that the protocol users or the community who are ultimately participating should have skin in the game. So that is why, the yield farming thing has started, and we have seen like sushi. When sushi came into the market, it just exploded after that, and we have seen so many projects have done this thing currently, and yeah, I mean, everyone loves it.
Yeah, totally. Chandesh, can you maybe talk a little bit more about Uniland, and if you're ready to screen share, maybe to explain more about the product, that would be great as well.
Yeah, so I mean, I don't have any screen share, but I will, I will try to explain to everyone. So, see, when in August we started, we were brainstorming. Like, initially Uniswap was there from multiple years, but there was not much liquidity, which was there on this decentralized protocols. But over the period of time, we have seen that people have started using this decentralized finance space. They have become more comfortable now. There are many audience which is more comfortable holding their assets on Ethereum or any other chain as compared to a centralized exchange. So over the period of time, we have realized there were certain money markets like Aave was there, Compound was there, and if you look at the ERC20 assets currently which are available in the market, there are 6,000 plus ERC20 assets available. Aave has so much of liquidity locked into their protocol, and so does Compound also and Cream also. And basically, they are targeting the major tokens, like which has high liquidity. At the same time, they are not very highly volatile, so that if liquidation sort of scenario happens, they have enough liquidity so that the capital is saved at last. So one thing we have realized, and I was also previously working for Matic. It is not very easy to get listed on this protocol. You have to go through the complete governance process. Whereas we had Uniswap, which allowed the asset swap feature to everyone permissionlessly. So the idea just came into the mind that if currently around 40 to 45% of the market is tapped into money market through Aave and Compound, there is still a huge market which is left, and the lending and borrowing is not possible for major tokens. So we came up with the idea where we started building the complete Unilend ecosystem, where we have our own DEX just like Uniswap, and we have our money market also, where the lending and borrowing can happen. And the major part is like we have seen this, that if you are dependent on liquidations for on other protocols, and if you don't have liquidity, then that was the major problem we had to solve. So we have built our own liquidation engine, where we are going to derive the lending and borrowing capacity of the tokens which are getting listed on our exchange. So like any token, if they want to start the lending and borrowing utility for their token, they can come list on our asset swap platform, and based on the liquidity which is available, we will allow the lending and borrowing of those assets. And obviously, I mean, our team is working to make this more capital efficient in the longer run. So yeah, I mean, we have also launched our alpha. If anyone is interested, you can go to app.unilend.finance and check out the product in action.
What would you say have been some of the challenges as you guys built this?
Me. Yeah. So in terms of challenges, there were so many, literally so many. So I mean, when we started brainstorming on the idea, also we received very mixed feedback from everyone, that there are already some major protocols who are working out there. They will also do this thing later on. You guys are too late and everything. So I mean, what I would want to say to everyone, who is participating in this hackathon, that guys, whatever you feel that you want to build, just go for it. I mean, if you like the idea, if you think that this is something which is needed in the industry, don't think about what others are doing, where the market is standing currently, how much the market has progressed. Just go ahead and build it. And yeah, I mean, this is what I have seen. I mean, initially we received so much feedback from many folks, that so again, this is one of the thing I would say to everyone. Yeah.
Yeah, that makes sense. Arpit, do you want to do a demo of DeFi Dollar, and also just talk about some details of how you built it, and what exactly is going on under the hood?
Yeah, sure. So like basically, I'll just mention briefly how the idea of DeFi Dollar came about, right? So we were thinking about this last year in May, and during that time there was a lot of discussions about DAI never being on its peg, right? And then that was also around the time when USCC or like Tether, one of those blacklisted one address, right? So even though everyone knew there are issues with centralized stablecoins, but then At that time, these fears became really tangible, right? And then on the other side, stablecoin market cap kept on growing, like 5 billion, 8 billion, it wasn't stopping. So basically, there's definitely demand for stablecoins, but then we realized that there's not a clear winner as yet, right? So then we thought of something simple. How do you, like how do you de-risk? How do you cut your losses? You basically diversify, right? So then we thought, let's do something simple. Let's build a stablecoin that is diversified among several other stablecoins, right? So kind of like an index of stablecoins, exactly that actually. And then, yeah, basically try to, have mechanisms which make it more stable. It is insured to a certain extent. Yeah, all of that. And then to be capital efficient, what we do is instead of keeping vanilla stablecoins in our smart contracts, we put them in yield generating protocols like Curve and then YVault. And yeah, so basically money Legos come into play, right? Yeah, so I'll share my screen and give a brief demo. Can you guys see that?
Yep.
Yeah, so pretty simple. Like these are the coins that we already support in our index. These are stable coins. Some of them are interest-bearing stable coins. So you can select what do you want to mint with. Idea is simple. Like if Tether goes to zero, right? And instead of Tether, you had DeFi dollar, then DeFi dollar won't go to zero. Like idea is simple. So instead of having like $72 in Tether, if I mint DUSD, and that like there's an algorithm which tells you the exchange rate. So yeah, based on like any of these stable coins that you want, you can mint DUSD, which is a DeFi dollar, right? And then what do you do with DUSD? There's a bunch of things, right? So the most straightforward thing is the savings account, and it's basically earning yield on your stable coins. No impermanent loss, no yield farming, razzmatazz, like simple savings account. And yeah, like the APY fluctuates. Last week APY has been 31%, and then last day sample has been 51%. So that is quite nice. And how this makes money is because the entire protocol TVL sits in Curve, and so basically there's trading happening, and then some amount of protocol money also sits in the Yearn vault, right? And they have some complex strategies which actually make money on your funds, and all of that trickles down to savings depositors. And yeah, like once you have DUSD, pretty simple to like deposit. Yep. And then the second product that we have is staking. This one is for the governance token. So DFD is our governance token, right? And this is a vault which enables fee sharing with our governance token stakers, right? And again, protocol income, whatever part is coming is divided between these two products, staking and savings. Yeah, and then with the protocol income, which is in DUSD, we buy back the governance token, which is the DFT token. That is the idea. We don't burn it though. So stakers just get it for like depositing it here, right? Again, like there are some APYs here. And then of course, like most projects, we also have yield farming on a bunch of pools. And the idea behind yield farming is not just like mindlessly, incentivizing any random pools. What we want is we want to make DUSD to be the default stablecoin of choice for DeFi, right? So there's a DUSD ETH pool, and apparently we did see a lot of LPs from like ETH Tether pool or ETH USDC pool migrating to this pool, right? So basically, if you were LPing in ETH/stablecoin pool, there's no reason that you wouldn't LP in this one because the yield right now is quite high, right? And these two are for our governance tokens, which like DeFi folks call pool twos. And then there's another pool called DUSD Front. So Frontier Wallet is like another Indian team. We are very close to them. So we are doing a 3-month, like LP program with them. So yeah, these are basically some of the things that we have been working on. And yeah, I think savings is like the easiest product for people to understand.
Great. Yeah, that was a neat overview of the product. What would you say are some of the risks with this particular methodology of backing it by multiple stablecoins?
So the risk is that fact if we put all of these in a single curve pool, right? There's a risk that if one coin fails, then the entire curve pool will fail, right? Because people will put the cheapest coin in it. That is one of the risks. So for that reason, what we're doing is there are several integrations in our protocol. Like we are working on the second one. First one is the curve one, but then the problem is it is entirely exposed to Tether, right? And so basically our team, the DeFi dollar team, championed an effort to have a curve pool that will have just DAI and SUSD. Decentralized stablecoins, no exposure to centralized stablecoins. We champion that so that snapshot, like the vote has passed, that pool is live now, and that is going to be the second integration. So now, depending on like what the governance decides, there would be some amount of funds in the main curve pool, and then some amount of funds in the decentralized curve pool, right? And basically the idea is like if one thing fails, not everything has to fail. Yeah. So that is the risk, and of course there's smart contract risk that is with like any DeFi protocol.
Yeah, that makes sense. Francesca, could you demo Superfluid and maybe talk about the challenges as you're thinking about deploying on mainnet? You were talking about gas prices and how you're thinking about overcoming that. That would be helpful, I think.
Yeah, sure. So Superfluid was born at a hackathon at ETH Berlin 2019. So we didn't start working on it immediately, but we kind of had this idea, banded together a few months later and started working. So Superfluid is essentially a framework to enable money streaming on layer 1 Ethereum chains. So not necessarily mainnet, but layer 1 Ethereum chains. So money streams essentially from your wallet to other wallets. And the way this works is very similarly to how some of these yield protocols work, right? So when you use something like DeFi dollar, your balance might not increase, but the value of your account increases, right? So there's a function inside the contract that makes your money grow. So we kind of extrapolated this and built it directly into our tokens, allowing them to either grow or kind of go down in time. And this depends on a user's streams. So a user can open a stream. So for example, I could open a stream to Arpit, and money would flow from my account to his account. So when we started building this, it was very clear that there wasn't really anything very similar to this. And at the same time, it wasn't clear if there was a market for this. It's still unclear if there's a market for this. But we do think that building new things always carries this risk, right? But it's still worth doing. Like, of course, you can build, we could set out to build the next Amazon, right? And then we have to beat Amazon. But something that's much more interesting is to set out to build something which is completely new, because there you don't have any comparisons. You make your own metrics. You establish what your own success looks like. And for us, success looks like a lot of people around the world making money and getting paid every second they work. And that's kind of the mission that we're working towards at Superfluid. So I'll just quickly demo that, and then I'll share a couple of the hard things we're dealing with at the moment. So with Superfluid, as I was mentioning, wait, wrong screen. Yes, so basically what you can do is you can stream money, right? So you send streams of money from account A to account B. But when we started building this, we decided we wanted to make it programmable, right? So there's this great article called Design Space in DeFi, where it basically explains that you can build a protocol in a lot of different ways. And based on how you build it, there is more or less space for other developers to build on top of it. And we wanted to maximize the space. So the way we build Superfluid is to be ultimately very much a tool for other developers to build amazing experiences that use streaming money. So it's not just a way of moving money from A to B, but it's a way to build new DeFi products that use streaming money. So I'm just gonna send a stream here. So basically, I'm gonna send a stream to a special contract we deployed, which utilizes our framework. And essentially, it's an NFT. So if you have this NFT, you receive the money that it receives. So I'm sending money to the NFT. And then as soon as the transaction is confirmed, you'll see that the NFT is sending money back to me. So I've got the NFT in here. It's this one here. And basically, by using our framework, it essentially kind of does all of this automatically. So the transactions, as you can see, are both here. So these numbers should match up, but they don't for some reason. But anyway, basically what it's doing is it's receiving the money and sending it back to me. And this is done through a completely automated process in the smart contracts. We've got a great example out there on GitHub that you can check out. And it's live on multiple testnets at the moment. It will be live on Matic very soon. It will be live on mainnet very soon. It will be live on our EVM chains very soon. So what we were talking before with Shozhan about was the fact that nowadays to deploy to mainnet, you really need a budget. Our contract is quite complex. There's quite a few moving parts. And to deploy it to mainnet at the moment will probably cost us upwards of $5,000. So it's not easy to build products on mainnet anymore, like it was when me and Sergey were going to hackathons 2 years ago. But the bar has gone up, right? But the bar has gone up because there is now a lot more money involved. The stakes have become much bigger, right? So the opportunity is also there. At the same time, I think there's a lot of opportunities in deploying to alternative chains. While they're still nascent, I think other chains like Matic, like XDAI, optimistic rollups, and even potentially other layer ones will take a market share. And that's because the demand for decentralized finance is greater than the capacity of Ethereum layer one. And as much as I love, and I'm sure a lot of the other guests love Ethereum, it just can't meet the capacity right now. And that's bound to overflow to other chains. So while at the moment, the liquidity on our chains is still not that big, I think that will change very soon. I think we'll start seeing specialized product deploying in different chains. So don't kind of lose hope because of gas costs. Simply broaden your horizons, look around, see who else you would benefit with partnering with and which chains they are looking at expanding to, and maybe look at deploying there instead. The Matic team has done a great job in India. I think a lot of folks around here have worked with them, so there's a lot going on there.
Awesome. Thanks, Francesco. Sergej, could you give an overview of 1inch? And yeah, if you have a demo, that would be great too.
Yeah, I hope my internet connection is okay, but I see some lags here. I'm very sorry because of this connection, because I'm right now in Dubai in hotel. It's a little difficult here to get a great internet connection. So you can understand me fluent, right?
Sorry?
You can understand me, right?
Yeah, all good.
Okay, great. So about 1inch. So I can show you a little bit also the platform. First of all, how did we start? So how I already mentioned at the beginning, I and Anton Bukov, my co-founder and CTO of 1inch, we started to participate in hackathons. The first hackathon was in 2018 in December. And we in Singapore, we talked with a lot of cool people and found out that it's a cool platform to develop them ourselves, our skills, because you learn on a hackathon how to deliver very fast and very efficient and also a working solution. So, and we found out that we can participate actually every month and maybe win something. And at the first hackathon, we won 3 prizes. It was awesome. And we continue to participate on all the hackathons around the globe, South Africa, New York, Denver, Boston, in Harvard, in Belarus. It was also crazy. India was really awesome. Yeah, we got really great positive praise from India. So and one of those hackathons in New York, we have built 1inch. We actually thought to build a tool for ourselves because we had the problem. If you swap somewhere like on Uniswap, you don't really know that you get the best price, right? Because not the liquidity is not only concentrated in Uniswap. There's Balancer, there's Kyber, there's banker and balancer. Right now, 1inch liquidity protocol as well with almost 2 billion of locked liquidity, and you don't really know where to offer the best price. So you have to compare. So you invest your time, yeah, and also your money, because if you have split you trade, you have to do multiple transactions. So what we did, we combined small liquidity pools into a single one by using algorithms, and we delivered it over 2 nights and 1 day without any sleep on ETH New York, and we didn't win anything. So it was really crazy. So those people whom I pitched the project, they said, "Oh yeah, it looks okay, but nothing special." Yeah, but at the end, we are right leading DEX aggregator, and this is a good example for every hacker here on a hackathon. You can just build an MVP on a hackathon, and you can grow to a leader on the market. Yeah, so we have right now around $300 million volume every day. And this is just crazy, yeah. Of course, Uniswap has more because of early adoption, but at the end, it makes no sense to swap anymore on Uniswap directly because we are there. We have API. You can use the API to get the best price on the DEX market by taking into account of gas costs. And yeah, we are like, it was crazy time. Like we were working 1.5 years without any salary, without any money. I had normal job, Anton as well. And we were hacking in the nights for you guys, actually, yeah, to for everyone who is right now in the DeFi space, to just improve the usability, yeah, and also the security as well. So, and yeah, we launched also liquidity protocol as well, which is more optimized and protect the people from front-running attacks. So, for example, if you swap on Uniswap, you can get a front run by one guy who swapped before you and swap after you, and it's not possible in our liquidity protocol because we introduced a new thing, virtual balances, and kind of spreads. Yeah, so if you swap in one direction, in the reverse direction, it takes time, yeah, to price recovering. Yeah, these are kind of ideas which comes just in the between, and we deliver it very fast. We are mission-driven team. So for sure, everyone who's looking right now, we are hiring, yeah, and we are looking for great hackers who are who would like to work for a great product, for own product. I tell to everyone, it's your product. If you're working with us, it's your product. And yeah, my whole life is a hackathon since we raised the first round, and it continues this challenging all the time and getting better and better. Yeah, and trying to being better. Yeah, thanks. It's about 1inch, and I would like to show how it works. So we introduced a new version here of 1inch. It was October, November, I guess. So it looks really complex, maybe for new people. If you like to have similar user interfaces, Uniswap, you can just disable the modules, and you can just select the token you want. Yeah, for example, I have 100 Ether, and I would like to swap to USDC. You can just swap. We show you some options. You can set the max price tolerance similar to Uniswap, and we have different routes. So if you see here, if you look at the table, so we show here that you can save like $600 by swapping on 1inch instead of going directly to SushiSwap or to Uniswap, yeah. And of course, you pay maybe a little bit more on gas costs, but you get also more. And we have a low gas cost mode, so you can pay a little bit less and get maybe worse. Here's not really good example. Maybe here like $203, or comparing to higher return, yeah, on higher amounts, you pay $1,200. It's crazy, yeah, I would say, the current gas price. but we have also lowest gas costs. So this is kind of trade-off. You want more tokens back, what you would get back, or you would like to pay less. So we are going to introduce a new mode soon, very soon, with some optimizations on our aggregation contract. You can also set limit orders. It's also possible here. Actually, it's built on top of 0x protocol, but we are going to introduce our own protocol very soon. And we introduce also a 1H token. So with 1H token, you have a kind of VIP entry card to vote for specific settings. We call it instant governance. So every protocol from 1H has specific settings. For example, liquidity protocol has a swap fee, has a price impact fee, has a referral reward, governance reward. And everything can be set by just voting. You can vote for specific settings. So here are also pools. You can create own pools, and we help also to bootstrap the liquidity of new tokens and new projects. So you can see we have a farming program for opium tokens. And we have here, for example, LDO, Lido, also a bootstrapping program. So we help them to collect enough liquidity to have more stable and healthy growth of the tokens. So yeah, that's actually it. We are planning more. We are building more and more protocols coming soon this year. And yeah, happy to get all the feedback, and yeah, feel free to connect us.
Awesome, thanks. And that's a great story of how 1H got started. Cool. So Haitham, maybe could you walk through Open and the problem you're solving with options?
Yeah, sure. Let me share my screen. Cool. Okay, so just start by giving like a quick explanation of what option is. So an option is basically a type of derivative that gives the holder the right to buy or sell a specific underlying asset on a specific date for a specific price. So like to give an example, so today is like each price is like $1,600. So an option for like the end of February as an expiry for like 1,100 strike price will give the holder the right to sell the underlying asset, which is ETH in this case, for USDC at the expiry time for like $1,000. So like if at the end of February the ETH price is like $500, you still can sell ETH for $1,000. So this option is like put option, and there is like another type of option is called call option, which give the right to buy the underlying asset. So like if you have like an option with 5K strike price and the expiry at the end of the month. So if like by the end of the month ETH price is like 10K, you still can buy ETH for like only 5K. Yeah, so this is the platform. We just launched V2 like recently, a month ago. So as I said, like that on V2 we have two option type, put and call, and the type of option are European. So in option there option you can only exercise the option at the expiry date, where like American option, you can exercise the option at any time before the expiry or at the expiry date. In V2 and our Gamma protocol, we have this feature called auto exercise. So if you have an option, you don't need to rush and exercise at the expiry date. You can still exercise after the expiry date if it's like profitable, like if the option and in the money, like the price of the asset is lower than the strike price for the put option or higher for the call option, then you can still exercise even after the expiry date. And V2 is cash settled. So for V1, like V1 was basically the first option protocol in DeFi, and it was physically settled. So when you exercise like ETH option, you need to send So if you have like one option for one ETH, then at expiry we need to send one ETH plus the option token to get the strike price and the strike asset. But for V2, you get the difference between the strike price and the asset price of the expiry. So like in our example, we have 1,000 put option on ETH by the end of the month. ETH is like 500. So you just exercise the option and you get the difference. Basically, you get 500. And the V2 is settled in ETH, so you get like $500 in ETH. So basically, the interface is pretty simple. You have here the type of option we have. So currently, we only support with options. We can support any asset that we have an oracle available for that asset. We are planning to add more underlying asset in the near future. And here you can see like the different XP that we have. So V2 we use like currently we use 0x as a trading venue, and because like for V1 we used to use Uniswap. So here you can see like the different options. We have call and put. So like as an example here we have like $1,920 call options. So this means like the expiry is like 26 February. So this means like if by 26 February ETH price is like 3K, then you can still then you get the difference between 3K and the strike price. Yeah, so you can buy. So here you can buy or sell any options by clicking on this button. So if I choose like this this call option, then here I can buy or sell it. We have different information. So we have like the max loss. So if I'm just like buying one, let's say 0. Okay, I don't know why. Showing no liquidity, but we have like the max loss, which is basically the premium you would pay if you buy this option, and the max gain, which is like infinity. So the max gain from a call option is infinite. So as higher the underlying asset go, then your gain basically increase. And also we show like the premium per token. Yeah, so this is basically it. We have also the dashboard, which can show you the option that you have and your expired or closed position. So like I was just testing a few minutes ago and bought like these options where I can see like the initial premium, like how much I paid when I bought these options and the total return currently. So this option is still out of the money because like ETH price is not higher than $19, $20 yet. Yeah, so yeah, this is basically it. We have, so as I said, like V2 is built on top of 0x. We have also this feature that called like the operator. So any user can basically set any address as an operator, and the operator basically can do the same action that you can do on your vote. So you can basically build a smart contract and set that smart contract as an operator for your wallet, and this smart contract can manipulate your vote. Like it can do like roll over your position by at the end of any expiry, and do like different stuff as long as whatever code you make there. Yeah.
Awesome. Thanks. That was a helpful overview. One question I think that's come up is on just what it would take for someone who has Web2 experience to just like hack on a DeFi product. Maybe Arpit, if you could take that. Just how you would go about it, either resources you found helpful or just what skills practically you would need.
Yeah, I think it's just about Googling stuff. But before that, it's important to get context, right? So you are in Web2, but then start with getting some context, which means, what is DeFi and what are the protocols that are there. And other than DeFi as well, right? Like just understand why there are blockchains, like, how are they fundamentally different from Web2, and what does decentralization mean, right? And after that, I think also understanding about, DeFi is one thing. There's also DAOs. There are some like kind of like gambling games apps and like lots of stuff that is being built, right? So DeFi is like one of these things. Once you have context, I think the next step would be to actually just dig deeper, right? Like what is superfluid building or what is 1-inch building? Uniswap is a great place to start, right? So all of this is till now was like about getting context. I think the next step would be to actually find a protocol that you like and look at their code. Again, Uniswap is a very easy place to start. Just look at their code, and once you have context, it would make sense to you. And along with that, also try tinkering on your own. Like, so there are tools like Ganache, Truffle, Hardhat. Try to get the basics of Solidity. There are like lots of online tutorials. One of them, which is my favorite, is the zombie game, kind of a crypto zombies. That is quite nice. So yeah, learn a bit of Solidity. It's quite simple. If you know programming in any language, Solidity will be very simple. And then you understand a bit about DeFi, you look at some of the code. I think then eventually all the pieces would all the dots would connect together. And yeah. So I think 3 or 4 years back, the tooling was not really nice, but now there are great tools out there. Newcomers can like really start building very soon.
Great. Would you what would you say are some of the differences between building a product in traditional tech versus DeFi? Like, what are the additional considerations that a dev would have to look into?
Should I take that?
Yeah.
No, please go ahead.
Yeah, anyone really. Francesca, you want to take that?
I'm probably the worst person because I have no tech background. So
okay.
I think probably Arpit used to work in tech, right? So makes more sense.
Yeah, I can take that. So I think one fundamental difference is like when you're writing APIs in Web2, you write like thousands of lines, right? But in Solidity, it's kind of like writing mission critical code, right? So think of writing code that powers a rocket. It's not something that you keep changing. And if there's a single error, right? Basically the entire rocket goes burst. So writing Solidity, fundamentally how it is different is because you have to think about each line that you write. You have to think about any possible corner case. Yeah, I think that is a fundamental difference. Instead of like, you can't really ship and then iterate. I mean, you can iterate, but then you have to ship a very good first version. Be very sure to the best of your abilities that you have thought about each corner case. I think that is one of the fundamental differences. Eventually, yes, like in Web3, you end up writing a lot more code, like a lot less code in terms of like the size, even though that metric doesn't make sense. But yeah, I think that is something that is quite different.
Yeah, if I can add something, I would say that when you're building in Web3, you don't know who your customer is. You don't know if your customer is a person, a contract, a bot, or an autonomous AI. Like there's no way to know, right? So you're building this open API that anybody can access with an Ethereum address. And you just have to make sure that that person has no way to break what you built. And you have to consider things that go slightly beyond just the code and how it works, but you have to think of economic incentives. You have to think of economic attacks. You have to think very carefully of external dependencies. So for example, if you a year ago, if you based your code on Uniswap as an oracle, you would have lost 4 million like BZX did during ETH Denver last year, right? So you have to be very careful when you're integrating someone else. If you don't understand exactly how they work and what their risks are, because you will be taking those on, and updating code in Solidity is much harder. So like Arpit was saying, it's basically like building a rocket. And if you have any pieces that you didn't build, make sure they work.
Yep, that makes sense. Chandish, we received one question on the proposal to ban crypto in India and how that affects the DeFi space. Do you have any thoughts on that?
Yeah, so first of all, I would like to mention this to everyone. Like, in my last interview, also I was asked this question. So, guys, you don't need to worry about all these things. This regulatory things takes their own process. They are very slow, and there are so many thought leaders working behind that. And currently, if you take example of India, also the crypto community and the developer community also has grown too big. So currently, the government is also exploring on different, parameters. The recent thing which also came into the, into the news, they have mentioned that, they have used the word of private cryptocurrencies. So, we are not even sure of what the definition is. And as far as, if I have to address to the developers who are, building currently, see, I mean, there is no point in worrying about it. There are so many good representatives from the Indian blockchain ecosystem who are talking to government and who are taking the necessary steps to make sure that all the people who are trying to enter or trying to build something, they are safe and secure. So I would say currently, there is nothing to be worried about, and we should just focus on keep building and keep shipping. Everything will fall in place ultimately. And on top of that, I would mention that government is looking to come up with their own currency. That is a very positive for us. I mean, the Indian government is looking to innovate, and they are also looking forward to accept the innovations which are happening in our industry. So I have personally taken this thing as a positive but not a negative, because currently we don't have any regulations. So at least now we are sure that government is looking into this, and there will be some things they will obviously some measures they will take, and ultimately there will be something around crypto. So we won't lie into no regulation zone no more. Yeah.
Cool. I think to end with, it would be great if each of you could talk about your vision for DeFi in the next 3 to 5 years. Some of the open problems that folks can work on, and yeah, just how you think this this space can go. Sergey, do you want to start?
Yeah, I would like to start. Thanks. So I see critical or weak points in DeFi space is the security. So we need more security experts from traditional market. So I was working for Porsche for like multiple years, and I had to organize all the security audits, and I got in touch with real hackers. Yeah. Who and auditors who are really professional. Yeah. And what I see right now in the market, there are some companies professional, like Open Zeppelin, Consensus, Mixbytes, and some other guys, but the quality is not the same as I know from the traditional enterprise world. So from the product perspective, so what we need is more efficiency, yeah, in any kind of implementation or idea which comes to DeFi, because we are right now in the problem that we cannot scale with the Ethereum network right now. So my co-founder, for example, created a tweet about yeah, we should maybe increase the block size again, yeah, because we are really on the limit all the time, and the price is growing, and the Ethereum price is growing, and everything is slow. Yeah, this is my point of view, and yeah.
Well, and can you actually just take this question as well? Someone asked about the future of DEXs. Will they replace traditional exchanges? I think you're probably suited to answer this question.
Can you please repeat? It was like
yeah, someone asked, what do you think about the future of DEXs, and will they replace traditional exchanges?
Yeah, the thing is, so what we have seen with the Robinhood story, with all the centralized brokers, and who just start to sell all the positions from the people, and so on and so on, and manipulate on all the fields. Yeah, we got fresh blood who joined the DeFi space. Also, Elon Musk wrote about that, and about Bitcoin Dutch, and it's crazy. DeFi is about freedom. So anywhere it doesn't matter where you are. You can sit somewhere in Africa or somewhere somewhere else, yeah, and you can access the decentralized computer, the Ethereum network, yeah, and you can interact with DeFi space without, in permissionless manner. So the future is, I wish the future of really decentralized finances in the mainstream. So everyone get the right access to such decentralized finances. For this, we have to scale. For this, we have to make more user-friendly everything, onboarding more user-friendly, and so on and so on. As soon we can achieve really less hacks in the DeFi space, we can get maybe more people. So I already mentioned at the beginning, so Iron Vault was drained today, and this is sad. This is really sad. $11 million were lost, and we need to improve that. When we improve that, we will have the chance to scale and to get mainstream, I'm pretty sure.
Yeah, so just to add to that, in my experience, what I have seen that there still exist a larger chunk of traders who are, still not comfortable with trading on dexes. They have their own reason. Like, when I also started, I was majorly using centralized exchanges, and I was also not comfortable. There are some folks who don't even understand Ethereum. I'm talking about the traders, the actual audience who are majorly generating volumes currently. So there is still a lot of users who are not very comfortable. But if we see down the lines, maybe 10 years or 15 years, the next generation which we are seeing, or the new audience which is coming into the space currently, what I have seen, these new folks are very comfortable on trading on dexes as compared to centralized exchanges. They don't, they understand the security risk, and they are okay with managing that from their end. Whereas a slightly older generation who was not very well equipped with everything, they are not so much comfortable with decentralized exchanges. So overall, on a bigger level, what I see that currently the volumes which are majorly on centralized exchanges overall will ultimately come to dexes, maybe down the line 10 years, when the audience will be more educated. Yeah.
Francesco, any thoughts on the future of DeFi?
So I definitely echo Sergey. We have to fix security. That's something that's super important. And the reason I think it's important is because we need to go beyond a niche, right? We need crypto, we need DeFi to become something that people use in their daily lives. And in my opinion, most people are not traders, right? A lot of people are savers. And I think it's very important to build very simple tools for people to save. And that's why I think what ARPA is doing, for example, is extremely useful. But I also think that if we want this to kind of graduate into a real economy, a real online digital economy, we need to basically create a new generation of people who are earning and spending money only through crypto rails. And that's something that, it's not going to be solved by building more exchanges, but exchanges are super important for that to happen, right? So I think we've had a couple of years where people have built a lot of very base layer technology that will essentially from here on just acquire a load of volume. But in order to acquire that volume, we need to bring people in who are not speculators. So I think what I'm super excited about personally with Superfluid is, for example, getting a lot of people to get paid in streams, right? To get paid in stable coins. And the reason I think that's valuable is precisely because if you get paid in a stable coin, you can immediately access savings technology like what ARPA is building, right? You can immediately access speculative options or hedging options like what Open or Sergey are building. So I think it's super important that we bring in a generation of people through earning and through spending rather than simply through speculating. So that's kind of where I would love to see more products coming in.
And I think that's also one of the ways I think that DeFi integrates with DAOs and some other types of cool things in crypto. For example, with Superfluid, it really helps communities that have nothing to do with DeFi really use DeFi products in ways that can actually supercharge these communities. Arpit, thoughts on the future of DeFi?
Yeah, I think right now DeFi is very nascent, right? Like we're just at trading, lending, borrowing. I think there will be more and more things coming up like options, right? And then, yeah, basically the Legos thing will kick in. Like we don't even know what is possible once we have like liquid, good liquidity for options on chain, right? And then, yeah, like we have perpetuals, we have futures, but it's possible to do like complex strategies with them. So basically new financial derivatives instruments are coming on chain slowly, and then you'll see things building on them. That is definitely happening. One thing that I've seen quite recently is like there has been a lot of discussion about the impermanent loss for LPs in like any AMM, right? AMM is a great innovation, right? Something that we didn't see in traditional finance. But then, of course, like it comes with its own problems. So there's a lot of mathematical research that people are pursuing in that area, right? And yeah, like, if you could have AMMs that minimize your impermanent loss. And of course, like Mooniswap went ahead in that direction as well. So that is quite nice. So yeah, that is something. And I think the future that I see in 3 to 5 years is when we'll simply call DeFi, decentralized finance, as finance. We wouldn't know of finance in any other way. I think that is the future that I would like to see.
Yeah. Great. Haitham, any final thoughts?
Yeah, I think I agree with everyone here. I think, yeah, we need to build more secure, decentralized financial system if we want like everyone to use this this decentralized financial system. It definitely need to be secure. Yeah, I think we will see a lot of innovation in the AMM. It first started with like basic Uniswap V1, and then it evolved to more complex math and more innovative like mechanism design. So I think we'll see more innovation there. Yeah, I think it will go more beyond just like stablecoin and lending. Like there is so much to explore in the derivative market. Yeah, excited for what's coming next.
Great. I think this is a great panel, and you've probably energized some people to build DeFi products. And I think, yeah, it's a good note to end. Thanks for attending, everyone. And yeah, here's the future where it's not called DeFi, it's just called finance, when all this permeates through a lot more than it has so far. So thanks, everyone. And our next event will be on Tuesday, 8 p.m. IST, where we'll be talking about careers in crypto for those who are interested. All right, thanks, guys.
Thanks, Jess. Bye-bye.
Thanks, everyone.
Bye-bye, guys.
Cheers. Good luck at the hackathon.
Bye.